Hi traders. Today I will be talking about a classic technical analysis indicator, Bill Williams Alligator. In addition, I will show the classic strategy of using this indicator and my strategy, which will give much more accurate and timely signals to open trades. So, let's start with the simple one. Bill Williams Alligator is a classic technical analysis indicator. It was developed back in the last century by financier and mathematician Bill Williams. It is part of Bill Williams' standard set of tools, and in general, it is an indicator that has been showing its effectiveness in signal accuracy for decades. The indicator consists of 3 moving averages with different periods, 21, 13, and 8. The lines in the alligator indicator mimic the alligator's mouth. Let's label these lines so that we can understand the strategy more easily. The fastest line is the lips. The red line is a line with a period of 13. It is called teeth. And the blue slowest moving average is called the jaw. In order to add the indicator to the chart, we need to write Bill Williams Alligator in the technical indicator search engine and leave it with the standard settings. Nothing for the strategy needs to change. So, Bill Williams Alligator is generally based on the classic moving average crossover principle. When a fast moving average, in this case the lips, crosses the other two, this gives us a buy or sell signal. When we analyze a chart, it is the green line that we need to look at first. Once the green line crosses the other two from top to bottom, it is a signal for a down trade. It's a classic signal, the classic use of the Bill Williams indicator. As you can see, here the alligator lip line has crossed the other two from top to bottom, and this is a sell signal. Here the profit is really made on the sale, and when the lip line crosses the other two lines from bottom to top, it is a signal for an up trade. As you can see, right here we have such a signal, and we can see that the upward signal also made a profit on this plot. This is a classic use of Bill Williams Alligator. What's the problem? In fact, classical usage has 2 problems. First of all, it performs pretty poorly during flat. And if we look at a flat chart, a bottom up and top down crossover situation will give a lot of false signals. As you can see, the lines are often intertwined, and this does not give us normal signals for trading. Bill Williams himself, when describing his indicator, called it hibernation. That is, the alligator is asleep, and its jaws, lips, and teeth are locked together and overlapping. You can't trade on Bill Williams Alligator in such a market. We need either a clear upward movement, at least a medium-term trend, or a clear downward movement. We can start trading in trending markets, but the problem is that when we see this trend forming, the major entry points have already been missed. This is why the Bill Williams indicator is often referred to as a lagging indicator. In order to distinguish the flat state of the chart, in which it is 70% of the time from a trend, in the classical strategy, you need to look not only at the fact of crossing the green line of 2 other lines, but also at the distance between these lines. If after the teeth and jaws of the alligator have crossed, we see a sell signal, the range between the lines is wide, this indicates that the trend is good. The wider the distance between the jaw line and the lip line, the stronger the signal. For example, right here, after the crossover, we see a wide spacing between these lines, and we see a good trend. Here the lip line has crossed 2 lines, but the distance between the lines is very small. And specifically at this point, the signal was weak. And then, when we saw this signal, when the lip line once again crossed 2 lines from bottom to top, and here the distance between the lines is already good, it shows a relatively strong trend. Therefore, the first tool to distinguish between just this state, where there will be a lot of false signals, and good trends that will bring us profit, is to look at the distance between the alligator lines. This is alligator's first problem with being bad and flat, and we need to constantly look for trend periods and be able to distinguish them from others. The second problem with the alligator indicator is that it is late from the actual chart movements. It's coming a little late. For example, here we see 2 signals on the alligator indicator. First signal down. We can see that the lip line has crossed the other 2 lines, and the distance between the lines is good. and that's when we enter the trade down. Yes, we will make a profit here, but in fact, the main movement, we have already missed the trade. We come in on this candle right here, and this is all the movement we're missing. Same thing in this example. Here's the alligator line. Cross the other two lines, we see a good distance, and the trade, we go in about right here. But that's the whole trend part we've already missed. We could use it for profit too. And we see the same situation in this section of the graph. The green line crosses the other two lines. The spacing between them is good. We enter the trade about right here, and we miss this whole trend. Therefore, I suggest not the classic application of the indicator, but another strategy of using the Bill Williams Alligator, which I have personally tested, and it performs much better and reacts much sooner to trends and helps you utilize them fully. We are not looking at the lip line and the intersection of them and the other two lines, but at the chart, at the price chart. In this case, the signal to enter the trade is the moment when the chart crosses the alligator lip line and the teeth line. That is, for an up trade, we need the chart to cross the green and red line from bottom to top. And for a down trade, we need it to cross the green and red line from top to bottom. Let's take a look at the same chart we've been looking at. If we focus on the moment when the chart crosses the green and red lines, then we will enter the trade, this trade up, not here, when the green line crossed, but at this moment, when the chart crossed the green and red lines. This is a buy signal for us, and we enter the trade upwards. It's the same thing on this lot right here. I will remind you that according to the classic alligator, we would have entered the trade at about this point, when the green line crossed the other two lines. And according to my strategy, which I recommend to you, as soon as the chart crosses the green and red lines, we enter the trade right here and get a much bigger profit due to this downward movement. Be sure to try this variation of using the Bill Williams Alligator, and be sure to compare the results. You will most likely find useful deals much more accurately and sooner. Again, let me remind you that this indicator performs best on charts where there is a clear trend. On flat states, when the alligator is asleep and the lines often cross each other, the indicator will give worse results. So first of all, we are looking for new assets where there is a clear trend. Secondly, choose large time frames. Then your signals will be more accurate. Try using the interactions of the chart with the lines rather than the interactions of the lines with each other to find trades. That's the simple strategy I'm recommending to you today. As always, write your feedback in the comments and see you soon.